Good morning, everybody. Welcome to today's 1 Million by 1 Million Strategy Roundtable for Entrepreneurs. 1M by 1M, as you know, is the first and only global virtual accelerator for technology startups in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. In support of that mission, we do these free mentoring roundtables week after week after week. This is the 573rd free roundtable. And within the premium program, we do numerous roundtables as well. So we literally have done thousands of roundtables over the years. I was talking to the head of collaboration products at Cisco yesterday, Jitu Patel, and I was telling him that, we run 1M by 1M on WebEx, and we've done thousands and thousands of events over the years. So the event is being recorded. You can find all the recordings on our YouTube channel, 1M1M Roundtables. On Twitter, we're at 1M by 1M and at Stromana. We publish a lot of interesting stuff. Hashtag 1M1M is for today's meeting. I will put this slide up back later so that you can call in for those of you who want to participate by audio. It is a roundtable, not a broadcast, so we want you to participate. Today, we're going to start our session with a conversation with Steve Eskenazi. He is a very experienced angel investor, and I invited Steve to come and talk about angel investing, his work in angel investing, trends, and so on. Steve, welcome to the show.
Thank you for having me, Smara.
Do you go by Steven or Steve?
Either one is fine.
Okay. All right. Well, let's start with a little bit of your background so we can introduce you to our audience. Tell us a bit about what path you have traveled until, where you are today, a little bit.
Sure. So my career has had sort of three distinct series of jobs. In the 1990s, I was Wall Street's first digital media analyst, introducing Wall Street to companies like America Online and Electronic Arts. Then for the next 10 years, I was a venture capitalist with a firm called Walden VC, where we invested in internet companies and SaaS companies and digital media companies. Our most well-known investment at the first round level was in Pandora, the music service. And then my wife and I found ourselves in an interesting position in the late 2000s, and we had 3 kids in 18 months. And I decided to sort of take a different path, and I decided to unwind from my venture capital firm and become an angel investor and focus on my home-based startup, the 3 kids. And for the last, I would say, dozen years, I've been spending my time about a third with my family, a third on my own portfolio as an angel investor, and a third in terms of giving back and mentoring and trying to help people in and around the community. So that's a bit of a background, and I'm sure we'll get into some more questions.
Yeah, I know your colleagues at Walden, at least 2 of them reasonably well, Libu and Somdas. So talk about what you like to invest in. Did you formulate an investment thesis for your angel investment practice, and how did you decide on which direction to go, and where is your sweet spot?
So I invest as an angel in 2 broad categories: technology and life sciences, and there's some investments in the intersection. My bias is towards companies I can help. I'm rarely a passive investor per se. and my bias is towards working with other groups and teams. I've been a member of J-Angels, which is a Israeli angel group. I've been a member of TIE. I'm a member of a group called SV Quad, which is Kanwal Reki, who I'm sure you know, which invests as a group together in Series A and C deals. But I mean, I like to invest in things I feel passionately about. I'm not going to invest in the next startup that brings something to your door at 1 a.m. that you've been hungering for. I like to be a contrarian. I like to invest in new and interesting spaces. But I think what sets investments apart for me, different than when I was a venture capitalist, where I had a fiduciary responsibility to increase the return on investment, is in the people. If there are relationships that can be built, and if I can help with my network with younger entrepreneurs, that's what I really like to do, is to help entrepreneurs fulfill their dreams and help them not avoid mistakes, because everybody makes mistakes, but to catch them early and to figure out a methodology around dealing with the issues that young companies trying to sort of prove product market fit and then scale once they've proven that product market fit. That's really where I like to focus my time.
So in terms of writing checks, do you invest pre-product market fit or post-product market fit?
Both. And my check sizes range from $25,000 to $1 million. There is no rhyme or reason. I rarely invest alone. I like to bring in my friends and other colleagues that I've known throughout the years. And the more value add help, the better.
So when you're writing a $25,000 check size, what is the typical round with your friends included? Typically, is it $250K, $100K? Where do you start?
Well, I can give you an example of a company that we just invested in called Resonado. That's based in Chicago, and my group, I think, put in 450, and the other lead put in 450, and it was a little over a $2 million round.
And this is actually perfect. Let's do some more examples of the kinds of companies you like to. So Resonado, is that a IT sector investment or a life sciences sector investment?
It's an IT. It's a technology company that's in that occupies the intersection of technology and consumer electronics. If we all recall, our first TVs that we watched, they were about that thick, and now TVs are this thin. They're doing for the speaker market what was done to the TV market. So they're making flat core speakers, and they're making the enabling technology. They don't make the speakers. They don't manufacture the speakers. They license their technology. They're heavily patent protected, and they have found traction with sound bars, with smart speakers, with the recreation space, both RVs and boats. And it's a neat company that is making a product that is faster, better, cheaper, smaller, and more ergonomic and better for the environment too. So it's an interesting space that not a lot of people are focused on.
Let's talk about a few more of these examples of where you have put in, and I'd like to actually hear also how they came to you and what stage they came to you, and what is it about them that caught your attention. So in this case, was it the fact that they had technology that was already IP protected, patent protected?
I think it was the entrepreneur. I met the entrepreneur either through TIE or through the J-Angels group, the Israeli group. And I kept in touch with him for a couple of years, and he continued to reach out for advice. He is a South Korean entrepreneur whose dad was an executive at Samsung. And interesting story, the dad sent the family to the U.S. to study. And this entrepreneur went to Notre Dame, but had to go back to South Korea to serve in the army. He served at the demilitarized zone in between North Korea and South Korea, reunited with his dad. And his dad said, I have all these ideas from my time at Samsung. Why don't you take one of these ideas and run with it? So it was definitely the fact that I like that market. With Lipbu, we had invested in Creative Labs way back when, which is a Singapore company. I know we have Singapore investor, Singapore entrepreneur on the WebEx, and it was just a situation where I really gravitated towards this entrepreneur and trying to help him out. And go ahead.
So tell us a few more of these case studies, just to kind of get a feel for what kind of things that you like to invest in. I'm just trying to gauge, kind of listen to stories, basically.
Sure. So one of my longest investments is in a company called PM Pediatrics, which is an East Coast-based company. It's a childhood friend of mine who is solving for the problem that parents of young kids have, which are that kids don't just get sick between 9 and 5. They offer after-hours care, and they've done this now for 15 years, so they were more on the pioneer side. And they've moved towards a telehealth practice, and their competition is emergency rooms, which average waiting time is 4.5 hours, and they're in lots of strip malls, and they have executed and built a company that's now well over 200 million in revenue, and exploring what kind of liquidity options and exit scenarios they might have. So another interesting, and that's in the middle of life sciences and technology, because now telehealth is part of their practice.
So we don't do life sciences per se, but what you're talking about is the category of digital health is very much within our purview. So yeah.
Exactly. I can give you another example of a deal I just did. It's a young Israeli entrepreneur. In fact, he dropped out of high school to do this. He set up a service on Discord as a new music channel. They were taking YouTube videos and allowing people to be their own DJs in a house party type setting. He grew it to over 20 million daily active users before Google and Discord shut them down, and they've kept their community intact. They have now explored doing this in a 100% legal fashion, and they're in that process now. It's called Rhythm.fm. So that's a very early stage, first check, and again, it was the strong connection with the entrepreneur that and my ability to help him. He's local here in Silicon Valley. That got me excited.
So here's a trend question, Steve. What is your analysis? You have watched the music business for a long time, from Pandora on. What is your analysis of the music business? We see music deals here in these roundtables from time to time, and a lot of the industry believes you can't really make money in the music business. You clearly have a different point of view. Can you talk about how you analyze the music business?
Yeah, I don't look at it that binary. Some people say it's, you can't make any money, or you can. I think it's very selectively investable. And that's been my approach. And I've probably raised the bar higher on music deals. And I was a private investor in Spotify as well. I've raised the bar on music deals more than I would in other spaces that are broadly investable. So I would probably agree with the people that say it's really tough, if not close to impossible, to make money in the music space. This is a
What business model? What business model would you invest in? Is it the subscription business model?
I think it's a combination. I think people don't realize how successful GoFundMe has been. So, in the case of these services, you don't necessarily have to say you need to pay us X amount. But interestingly enough, some companies have found they've made more money from saying, we provide the service for free, but we're kind of starving students, and if you would consider giving us $10 or $5 or $20, hit the GoFundMe. That's been a very successful way of funding the company and getting it going before you could figure out exactly what the precise
But what is
model
the
would be.
But what is the steady state business model? Okay, you start with the GoFundMe campaign, Kickstarter campaign, but what is the steady state business model people can sustain a company on the basis of?
Well, in this case, it's a freemium model where if you want to play disc jockey, and if you're in any of these Discord rooms, you'll see it. You may be able to um, immediately publish to an NFT. So you bring in other aspects of business models. In this case, NFTs. Ultimately, I think there will be a subset that will want to subscribe, and then if you have, in this case, they got off of their own without any money, they got up to 20 million DAUs a month. That opens the advertising door as well. So it's not a single business model per se, Rana. It's a couple of different ones and how they sort of fit together. And the beauty of the online business is that you can test these out. You can do A/B testing in different geographies, different communities to figure out really what's going to stick.
And talk a little bit about NFT as a business model or apps of, applications of NFT, use cases of NFT. What are you seeing? Has anything stuck with you that is particularly noteworthy?
Well, I will say the two most popular, I mean, if there have been trends, broad trends, I think sort of, Web3 crypto NFT has been one. And then I would say that NIL and the influencer economy has been the other. NIL standing for name, image, likeness, and how do I monetize it? Specifically for NFT, I would say it's still in the embryonic stage, trying to find its footing. I think we've seen some incredible miscalculations in terms of the value. You looked at Jack Dorsey's first tweet at, what was it, 4.5 million, and then it was resold for a couple of $100. So I still think these are looking for their footing. I do think there are certainly both niche and broader applications, but I think they're going to have to be proven out over the next year or two, because sadly there has been a bunch of, I don't want to say fraud, but haven't been the most scrupulous characters. They've been bidding up their own NFTs to create artificial pricing. So I think the biggest issue for NFT is there really isn't the stability of the pricing model around NFT is not there yet. So you look for the niche environments and applications where it can start to be proven out.
Do you think the art world is going to embrace NFTs? And I'm talking about the physical art world, not just the digital art world. The digital art NFT world, I have some question marks against, but what about the physical art world?
I think they will. I think they will dip their toe and test it out. I think they will. They will look at some hybrid. I think they'll look at some hybrid models, and I think there are ways of combining physical and digital that are kind of interesting.
Yeah.
I
Yeah, I think
think that is certainly something that uh, I don't see having the downsides that some of the other applications we just talked about have.
yeah. I was talking to Eric Benamou 2 days ago, and he was like, "I'm looking for a good good application for an NFT. I'm really looking for a good use case." I'm like, "Yeah, maybe the art one is a decent use case that has more validity than many of the other, like Jack Dorsey's tweet certainly has no validity in my opinion." All right. Well, what about exits? What all have you seen through your investments? What has been some of your interesting exits, and what have you learned trends-wise from those?
Well, I think there are I think there are a couple of tried and true sort of commandments. I think the best companies get bought; they're not sold. I think you have to build companies the right way, and you have to scale them the right way. And when I say the right way, I mean that throwing money at problems is not a solution to the problems. And I think we're now going to go through a tough digestion process for the next year or two, whereby companies just raise money and money and money and money, never solve the problems of institutionalizing knowledge and building processes within the companies
Yeah.
to scale them effectively. And now now it's all coming home to roost. And it's going to be a very tough workout. I think some of the companies that I've invested in that have had exits have gotten over those things. TransferWise, Alibaba, Spotify, for example, certainly Pandora. Um, you know, that they built companies to be independent, and then if and when somebody else came along, um, they looked at those opportunistically. I think for the earlier stage market and entrepreneurs, I think setting up milestones for each fundraising that you do, and then setting them up such that after you've hit those milestones, you can go back to the market and do quote unquote a market check, which allows you to either bring more money in or look if there's a partner out there that might be interested, is much better than sort of, the proverbial we're building a company to be sold. I think it's important to identify those milestones that create value. And as I said before, to um, build in the processes and the institutionalized knowledge that will allow you to scale, and then give yourself those additional options without sort of closing or narrowing your exit.
Interesting. So we've done quite a bit of work in these sessions, bringing on investors to talk about how they're thinking about exits, especially the early exit category. And then I've brought on people from the corp dev world also to talk about exit from the buy side. And I want to underscore a couple of nuggets that you would probably appreciate. Example, in the cybersecurity universe, small funds, some of the small funds are starting to think about kind of building to sell, just because it's become so difficult. There's cybersecurity is so invested. There's so many companies, so many investors who've invested in cybersecurity. Just getting meetings with the enterprise CISOs and CIOs has been really difficult. So they have to go through other people, maybe the managed service providers or other companies, and become their OEM, partner, somehow or the other, to get the seat at the table has been really hard. So So I think the early stage investors in cybersecurity are starting to think about an alternative of building to sell to a larger company that has that seat at the table. So that's one nugget that I want to kind of share. On the buy side, one of the guidance that the corp dev people are providing is also that there is so much going on, they need to know about the existence of a company, right? So even if you don't build to sell, you kind of need to make sure that you're on the radar of the people who may be on your exit strategy path. So they're, whether it's the chief product officer or the product managers who are in that related product group of a potential buyer or the corp dev people, they kind of somehow there needs to be some PR or something around your product such that they get to know about you. So these are just my two kind of nuances to your comment that companies get bought but not sold. But you do need to create the conditions under which they can be bought.
I agree, and cybersecurity is a very interesting market because of that. Clearly, there's an important delineation between point solutions and end-to-end solutions. Point solutions are easy to buy and easy to integrate, and secondly, if we look at the hiring market in general, I've seen more companies miss their hiring targets than miss their revenue targets. So companies are searching for good people. So the whole
acqui-hire, absolutely.
Right, right. When you say, can we sell a company for 10 million? I mean, that's really an acqui-hire, right? For the bigger companies, right? I had invested in a company called Duo Security that sold to Cisco just for that reason. The company thought they were going to go public, and then Cisco came up and said, "Hey, this is a niche area that we really like, and as a result, we're gonna take you out now." So I think that works in the cybersecurity space. Other spaces probably more difficult, but I think the tailwind is really the notion that most big companies can't find enough good people. So if somebody's got an R&D team or a product team or has institutional knowledge in a space that's new and different, I think that value is going to be perceived a lot higher.
Yeah, very good. Steve, great conversation. Thank you for coming today and sharing your thoughts.
Sharmana, my pleasure. Anytime.
Take care. We'll see you soon.
Okay. Bye-bye.
Bye. Folks, we'll go to the entrepreneur pitch session. And remember, this is a safe working session. You don't need to feel nervous. You don't need to feel defensive. This is not Shark Tank. This is here to do strategy work. And if you disagree with my feedback, that's no problem. It's your venture. You do whatever you want with it. Listen and then decide how to deal with the pushback. All right, we are going to start with Pradeep first. I don't see the name of the company. I see the name of the founders, but not the name of the company. So
right,
the name of the company.
The name of company iBay.
iBay?
iBay. In the second page, you can see that.
Okay. All right. What do you do? Tell us.
Okay. So we are a technology service provider for F&B industry. So you can see the founders, right? Founder screen. Okay. So this is about the founder. So we are solving a major problem, three major problems for the F&B industry. We are introducing a B2b procurement. This B2b procurement is kind of a group buy option. For example, we integrate with 300 over restaurant partners in Singapore. These partners, they want to buy different materials like vegetables, oil, rice, whatever maybe. So we use their inventory system to consolidate and send to a super supplier to get a better price. So across this supply chain, everyone will get a good, a win-win situation. For example, if you go and buy a tomato for 1 kg, the price is different. But the same tomato you buy 1 ton, the price is different. So we are helping them to do a group buy and then get a better price. So we are solving a problem, rising cost of ingredients for the F&B players. And second one, there are different operations in the F&B. Example, the floor operation, kitchen operation, and then the stock take and sales operation. These operations, they need different type of automations needed. For example, order automation. So we introduced a new system like WhatsApp based ordering system. So customers go to the table, scan the QR code, order, an order will be placed in WhatsApp. And seamlessly we are collecting the WhatsApp number by getting a proper agreement and all those steps. And finally, what we do, we are helping the restaurants to collect the customer data, and this data become oil for them. And we provide a platform to integrate with Facebook and Insta, so they can create their own profile, set up, they run their own campaign for the precise target audience. So that's one of the operational automation. And apart from this, we have point of sale system, we have a inventory system, inventory automation using the IoT. So we collect the data. It's kind of a smart mat. Okay, this smart mat would continuously collect the weight of the items what they procure. So in sense, the inventory is automated. And finally, the kitchen, whenever they receive an order, so we automate the order, depends on the different items, processing different items. And
is this primarily for restaurants to group
mainly for restaurants now.
Mainly for restaurants. You have restaurants on one end, and you have the food service providers, food providers on the other end, ingredient providers on the other end.
Right.
And is this already out there, or is this a concept stage venture?
Yes, it's already out. It's all bootstrap. And in Singapore, Singapore government helps a lot for F&B industry, especially in the IT industry, especially in the innovation. So we raised of quite close to $1 million government grants. It's not a fund; it's a grant.
Okay.
So it's a reimbursement basis. Once we do the project, they reimburse 50% up to 80% of the total cost. Okay, so this is how we are working. And last year we have a traction of 1.6 million Singapore dollar. And just the customer acquisition.
In revenue, or 1.6 million in gross merchandise sold?
No, in revenue.
In revenue. And your revenue model is a commission on these purchases?
Okay, we have multiple revenue models. Okay, first one is commission. Second one is we have a subscription model. And third one is per delivery model as well. Per delivery model, in sense, we are helping them to deliver the products. So we are connecting with all the delivery partners. So through each delivery, we are charging a certain fixed fee. So basically, there are 3 types of delivery revenue model we have.
And only in Singapore right now, or elsewhere as well?
Right. We are in Singapore right now, and Malaysia, we are doing some basic operations over there. We have started doing.
So the revenue is all from Singapore?
Yeah, main revenue is from Singapore.
Okay. All right. Let's go to, I think we understand what you're doing. What brings you here?
Okay, that's interesting thing. Okay, what we are planning is we are going to going in the process of regulation A+, filing to SEC to raise funds. Hope you're familiar with regulation A+.
Not at all. I've never heard of regulation A+ to raise funds in American or in the startup industry at all? Why is that relevant?
Okay, right. This is a kind of a new, not new, it's kind of a call as a mini IPO, they call it as. So we need to file to SEC, audit need to happen.
Why
And
do
after
you want to do that? Why? I mean, startup financing is not done through IPOs. Why would you want to do that?
we are just exploring that option. Yeah.
I don't recommend it. I mean, startup financing is a very well understood process at this point. So why would you want to go do something that is kind of uncharted territory, not common at all, not looked upon very well either in building small companies? So why would you do that? That's my number one question. The number two question is, you're talking about US expansion. Why is it a good strategy right now to expand in the US? US is a crowded market. US is expensive to penetrate. If you're getting traction in Singapore and building revenues, and Malaysia seems to be a place where you already have some beginnings of activity, why are we talking about US expansion right away? Because marketplaces, you cannot start everywhere. You have to go one by one. You have to make one marketplace, start to produce and really scale before you can start other marketplaces. It's a very local, and in fact, I would say hyper local. Your business is not only local, it's hyper local. So it's not such a good idea to go start different markets all at once at a very small scale level. So tell me what is your thinking and why you are thinking about the United States yet already.
Right. Yes. We have, since I told you, we are exploring the option of regulation A+. Okay. And that is the reason we are looking for US expansion also, because the regulation A+ only work for USA market, not for other market. So one of my consultant back in US, he suggested we can rise up 10 to 15 million through this regulation A+, but it's going to be an expensive process. You need to spend quite close to $500,000.
Who's advising you?
I'm sorry?
Who is advising you on all this stuff? I think you're being advised in the wrong direction. That's my opinion, but I don't mean, who knows.
Okay, right.
I think you're going in the wrong direction.
Okay. All right. Anyway, we are doing our expansion in Malaysia as well now. We are quite aggressive now and going to Malaysia. So we are looking for funds, even for acquire more people, more merchants in Singapore as well. So this is two different category. One is exploring the regulation A+. Through that, if it is
think it's a waste of your time. I think it's a waste of your time. You should learn how to raise money for startups and raise money for startups the way startup funding is raised, not by going for some IPO process, some TUI IPO process.
I understand. Yeah, we are doing in a parallel approach actually. Yeah.
Don't waste time. Time is one of your biggest, most important resource and most scarce resource as a small company. Don't waste time doing stuff that are irrelevant and don't matter.
Okay. Right.
All right, that's my 2 cents. Take it or leave it. I'm going to go through the next two presentations and we can take more QA questions, and including from you, Pradeep, if you have other questions, I'll be happy to come back to you. Okay. Let's go to, let me learn to pronounce this name. Olabode, how do you say your name? Do you have a short version?
Olabode Qudus.
Olabode, okay. All right, tell us, what are you doing? Capriquota?
Yes, Capriquota. Good afternoon, Chairman. My name is Olabode Qudus. I'm the founder of Capriquota, where we provide a deep hiring platform for tech companies and startups in order to accelerate their engineering and design team artificial reporting. So who are our customers and what's our value proposition? Our customers are tech-based companies, companies who are in need of talent, and at the same time we have customers why engineers and developers
Worldwide, where are these
and
tech-based
parents who are willing
companies?
to learn. Why so
Where
the tech-based companies?
geographically, where are these customers?
Okay. Oh, we have currently we have some customers in Nigeria and US.
So the customers are in Nigeria also, or just in the US? What are you trying to do here? My question really is, if you're trying to do remote hiring, rewarding for companies and talents without hassle, are we talking about the talent in Nigeria connecting them with US customers, or, is that the model?
Yes, that's the model. That's the model.
Okay. Okay.
So our customer definition, like I said earlier, the tech companies untapped talents with limited opportunities. So what I mean by the untapped talents with limited opportunities now is we tend to source for talents, people who don't have any experience with technology. We train them with
So when you're talking about target customer definition, are you talking about both sides, the supply side and the demand side?
Yes, I'm talking about the supply side and demand side.
So you need to think about, if you're talking about a kind of like a marketplace business model, you need to think of demand side and supply side separately.
Oh, yeah.
Is this a marketplace? Is this a two-sided marketplace like Upwork?
No, it's not a marketplace like Upwork. Basically, let me explain what we do. Now we have companies in the US who are in need of talent. And we have companies here in Nigeria as well who are also in need of talent. That's one model. Then the other model, we have a lot of techies who actually need of a job, but then they're not being vetted. So what we do is we actually vet all these engineers and designers to show like they're actually ready to connect them monthly.
You're very difficult to hear and very difficult to understand. So I'm trying my best, but I can hear only like a third of what you're saying and understanding even less.
Can you hear me better?
So try to adjust your audio and everything. Go ahead.
Can you hear me better now?
So I'm trying to understand the model. Okay, let's look at this. Your 150 engineers and designers have registered.
Yes.
And you have onboarded 7 companies who are going to hire these people. That's the idea. You have.
Yes.
And what is your business model?
Our business model is B2b, transactional based. Company tends to pay in respect to the number of engineers they're hiring.
And that's not a business model. Who pays how much? Like when a company hires an engineer or a designer from your platform, are they paying you a fee to hire? Are they paying you a percentage to hire? What is the business model?
They're paying us a fee to hire. Basically, when a company pays to hire a particular engineer, that's a business model.
It's a recruiting service, basically. It's a recruiting service.
Yes, it is.
And they're hiring remote workers based in Nigeria.
Yes.
Okay, got it. How do you think about funding? How many, see, here's for all of you, not just for Olabode, it's for everybody who's thinking about raising money. People will fund you if you can show them a path. Investors would fund you if you can show them a path of going from 0 to 100 million in 5 to 7 years in revenue. So 5 to 7 years from 0 to 100 million in revenue is hyper growth. You have to show how you're going to achieve this kind of hyper growth before you can even think about raising money. So I haven't seen anything in what you've presented so far in how you're going to achieve that kind of hyper growth. So you need to work through that whole, there's a whole, discipline of early stage entrepreneurship that you're going to need to learn. So you're asking me if you're the founder, if I'm the founder of Capriquota, what will be my next move? It is not necessarily the only question. It is the question, if you are the If I'm the founder of Capriquota and your stage of learning, not in my stage of learning, I know a lot, but you are a beginning entrepreneur, right? So the first thing
Yes.
you need to know, you need to do is learn the methodology of how to build an early stage startup. So I will explain. Why don't you hold on for a second? Let me finish talking to the next presenter, and then I will explain to you how to use 1Mby1M for your own learning. And this you can do no problem from Nigeria. And I think that would be my next step, because there's a, right now what I've seen is very, very naive. And you want to go from being very naive to somebody who's fairly knowledgeable about how to build a business. And that's a gap that we can bridge for you. That's what I would do. That would be my first step.
Thank you.
Okay, and by the way, Pradeep, if you don't know how to raise startup capital, that would be my guidance to you, is please study and learn what you need to learn, and then put your, one foot before the other accordingly. So we'll go to Ranga next. Ranga? I'll come back to both of you in a moment. Let me finish talking to everybody, and then we'll come back. Where is Ranga? You need to unmute your line.
I see. I'm not muted. Yes. So good morning. Yeah, thank you for having BEI.RE in this roundtable. Good to meet you.
You're very welcome.
Panelists. And BEI.RE stands for Blockchain Event Index for real estate. And this is something that we see enabling our vision of real-time real estate, which, as you know, in real estate, transactions take time. There's a lot of often manual paper and so on involved. And so that's our broader vision. And so I'm based in San Jose, California. Next slide, please. So that's some of my contact info. And just a little background on that slide. I am a commercial real estate broker in San Jose. And also my background prior to that is 20 plus years in technology, in software, et cetera. And with that, let me just give a little background on commercial real estate from an investor point of view. So the investor is buying a business which generates a net operating income annually, and the value they place on the property is based on the cap rate that they are wanting from that. So the value of a property is the NOI divided by the cap rate. So as the cap rate goes down, the value of the property goes up. So the chart here shows, for example, blended asset class of office, industrial, and retail. What would happen given last year's numbers if you went from a cap rate of 6.2, which is approximately where it is at, to a cap rate of 5.5, you see a $50 billion increase in the annual investment sales of these properties. So the question is, what is keeping the cap rates of office, industrial, and retail higher than asset classes such as multifamily? So multifamily is trading right now at a cap rate of 4.5. And that is primarily the uncertainty in the future income that an investor sees. That uncertainty is reflected in the increased cap rate. And why is there greater uncertainty? It's because of poorer market data in these office, industrial, retail asset classes. Next slide, please. So why is the market data poor? It's because the current solutions don't service it. The traditional means of exchanging how much rent is paid, etc., which is private information between a landlord and tenant, is really gossip among the commercial real estate brokers. And this happened through emails, phone calls, and so on. But there's not much discoverability in that. It's basically through your personal network that you get such information. And on the other hand, there are current SaaS solutions which are asking brokers to put that information into their system, etc., and which makes it much more discoverable. But then brokers don't have control on who gets that data, and people are very sensitive about sharing this information. So less information gets shared, and sometimes inaccurate information gets shared, etc. And so, in addition to that, it is not real time or comprehensive. So those are that's the current situation with this data. Next slide, please. So our solution is essentially to move away from a model of data aggregators, which are trying to aggregate this transaction information, towards a model where we can facilitate discovery simply by knowing the existence of the data. We call that an event, whether there's a lease or a sale of a property at an address. That's all we need to know. We don't need to know the financial details. And with that, be able to request that information from the party that has it, and then have that sharing of data happen privately. So we've created a mobile app that brokers in the industry use. There are some gaps in terms of having real-time access to listing information in the field, et cetera, which our mobile app solves. It creates workflow efficiency also within a brokerage. And at the same time, in sort of organically, in the use of the app, we capture these lease and sale transaction events in real time. And there is an inbuilt marketplace where this transaction information can be requested and shared privately. Next slide, please. So our business model and TAM is twofold. There's a subscription revenue for use of the app and the efficiencies it provides for brokerage and brokerage staff. We see that North America TAM to be $300 million. And then on top of that, there is the transaction revenue from the sale of this lease and sale comps and this real estate information. And we see we would get a percentage share in the value of that transaction. And we see that at a $700 million North America TAM for a total TAM of $1 billion. Next slide, please. I can't hear you. I think you're muted. I can't hear you.
Is there any validation on these numbers at a small scale?
So yes, so we have, for example, for the subscription revenue, we have existing service providers whose revenues we can use, and the numbers I've used are much smaller than even the revenues being generated in that market today.
No, but your app is not in the market yet.
No, but what I'm saying is that there are people
no, my
providing
question
similar.
Is your app in the market yet, and do you have any validation?
Yeah. Let me get to that. So our go-to-market strategy is previous slide, please. Previous slide. Yeah, our go-to-market strategy is we will pilot this app in select metro area markets, and then once that we have the validation, approach the commercial real estate brokerage headquarters to get buy-in into this new model of sharing this real estate data on the marketplace, and then do North America-wide rollout, and then bring in the buyers of the data, which are the investors, appraisers, lenders, into the marketplace. So next slide, please.
So you have two businesses. The subscription business is what you want to build first. Develop some data before you build the transaction business.
That is correct. Yes. That is exactly right. Yes.
Right.
So so in terms of traction, so we've been working for actually the company was founded 3 years ago. We've been working for almost 2 years with this Silicon Valley Association of Brokers here. We have a pilot going with them with 1,000+ transactions, which is growing rapidly, and we have the 4 of the top 5 commercial real estate brokerage firms in the world participating in this. We have validated there is a strong commercial real estate investor interest in this high quality data, especially in real time, which is not available today. And we've validated that the brokers, they like our app and that they're using it and they're driving enhancements with providing the feedback. So that's where
How many brokers are using the app?
So we have, so it's a 2-step process. We need to get the data for these transactions from the brokerages. And so we have basically the research departments in all of these commercial real estate brokerages participating. And the onboarding with the brokers has just started in the last 2 months. So we have a small handful of brokers, but it's more, it'll be rolled out, once sort of the initial sort of brokerage management says, okay, now we want to roll it out to the larger set of brokers there. So yeah, so we are looking to raise $1.5 million, which has a goal of basically getting to the point where the data marketplace is operational with 100,000 plus transactions. And we have a kind of a plan in mind of how we want to raise it. We want to raise it as a hybrid model where we want industry participants like commercial real estate brokers to be part of this fundraise through AngelList. The part of the reason is that we think they will be the champions for this in the industry. And so our goal is, this is a key marketing strategy to get stakeholders in the industry to invest. And then we want to raise the additional 900 from 3 seed VC investors. We have a company valuation of 15 million in mind. And we want to kind of do it slightly differently. We will bootstrap it.
Numbers. I mean, 15 million, 3 VCs doing 900K from 3 VCs. Who's doing these numbers? VCs don't spend time on companies where they don't have a minimum amount of ownership. So 3 VCs, 900K at 15 million, there's no chance of that working.
Okay, so I was looking to get your feedback, but yeah. So, but our idea is that we want to basically.
I like your idea of getting industry professionals because I think having customers as investors is a very nice strategy. I've seen that in other cases. Okay. We've used that strategy in other cases. I like that strategy very much. Mm-hmm. But that part of the strategy I like. But the assumption that you can get 3 VCs to put in 900K at 15 million valuation, that's not a valid assumption.
Okay, it's combined 900K, right? So it's 300 roughly from each, yeah.
That's my point. Combined 900K, can you imagine how little ownership these people have? Why should they spend their time on you? They won't. I see.
So, but yeah, so that was kind of my thing is, get your thoughts on sort of suggestions on fundraising, yeah.
Yeah, so I think my simple input is, if you want to go to a $15 million first raise valuation, you have to bootstrap quite a bit further. And that's why I was asking you, have you got subscribers? Remember you showed me 2 businesses, and you have to start with the subscription business first.
Yes.
Right? So you need to show that you can build a fast growth subscription business first.
Yeah.
And your first round valuation is going to be based on that subscription business traction and validation and speed. So that's what I would continue to validate and build up on.
Mm-hmm. Right.
Yeah, I would say that's my feedback.
Okay.
All right, so let me go through a couple of things, and then we can come back to more Q&A. All of you who have presented and in the room can ask more questions. So if you like what we're doing here, by the way, please refer 1M by1M to serious entrepreneurs in your network. We're always looking for good entrepreneurs to work with. Resources-wise, you'll find everything at 1MBy1M.com. And your learning can start for free on the blog, and in the Entrepreneur Journeys book series, of which there are 12 volumes, you can find also a lot of learning material. These roundtables happen every week. You're welcome to come back as many times as you like. You can only pitch and interact for free once. Otherwise, if you want to continue interactions with me, you have to be in the premium program. The premium program is our full acceleration program. So you get extensive methodology guidance, a full detailed curriculum. So if you're trying to learn the nuances of fundraising, this is a very good place to learn how investors think. We do help you with business development where we have, contacts. So depending on the sector, depending on our Rolodex, and if it matches, we will introduce you to people who are in our network. And in some cases, we also open up networks because we have a lot of credibility in the market. People whom you're trying to reach may be more amenable to connecting with us than with you directly, but we can also facilitate those connections in some cases. And then you get feedback, interactive feedback like you got today, a little preview into, on a weekly basis within the premium program in private roundtables. We do help you with financing. We work with 500 plus investors, but you have to be ready for financing to be introduced into the investor network. And then we emphasize quite a lot on investor entrepreneur fit. So, you have your business, for instance, we're talking about a prop tech business with Ranga. We need to find investors who are interested in prop tech, which we do have such investors. And then there are some more generic investors who are also doing prop tech, et cetera. But we have to find people who are likely to invest in your stage, in your sector, in your business model, et cetera. So all of that we pay attention to in the introduction process. Geography is another filter. People invest in certain geographies. They don't invest in all geographies. So that's going to be another relevant factor. So on. So that's a quick summary. You can go on the website and find more resources. A self-assessment tool is available on the website for free. These are the due diligence questions that VCs would ask you. I strongly recommend you take a look at that. It's your prep tool as well for VC due diligence. The bootstrapping course is also pinned to the top of our blog. It's a free course, less than 1 hour. It gives you some of the philosophical nuances of 1 million by 1 million. We have a lot of Udemy courses. We have about 30 Udemy courses where different topics are treated as well, and you can acquire them for very little money. All fine. If you want to start there, it's fine. A lot of people do, 1 or 2 Udemy courses and then very quickly switch to 1Mby1M Basic or Premium, where they have access to the whole curriculum. But we are okay with any of those modes of learning. We've created as many touch points and as many learning resources as possible so that you can decide on what works for you. 1Mby1M Basic is a monthly subscription model. Premium is an annual subscription model. So go to the website, you dig around what to expect from Premium, Basic, FAQs, video FAQs, description of the curriculum, and so on. We have over 3,000 hours worth of curriculum, and every so often we do like extensive kind of upgrade and repackaging of the curriculum. We're going through that process at the moment. So by the end of the summer, we will have made another big progress in packaging the curriculum. We have trained a lot of entrepreneurs on this curriculum at this point, so we know that the curriculum works, and we know that, for a young entrepreneur or a first-time entrepreneur, young is not the issue. It's more the first-time entrepreneur and not having the knowledge of what it takes to put one foot before the other in entrepreneurship. That's really what we're trying to address. You could be 65 or 70 and still not have that knowledge, and if you want to acquire that knowledge, you can acquire that knowledge here. Please do go through the investor introduction page so that you understand how we go about doing that. There are some policies, and don't come in expecting that tomorrow you're going to be introduced to investors. There's usually work involved for us to get you ready to be introduced to investors. There's a big checklist of stuff that needs to be right. Our philosophy is do not go to investors as beggars, go as kings. And that means you have to bootstrap first, raise money later, and have enough validation, enough strength in your pitch, enough strength in your business such that investors are falling all over themselves to invest in you. It is not an easy target, but part of the problem right now is that investors are getting quite used to people doing a lot of bootstrapping. So they see very mature deals, de-risked deals, and they're kind of spoiled almost. They like to come to the rescue of victory. And that's why we follow this philosophy of do not go to VCs as beggars, go as kings. Okay, that's it. In May, we have 4 roundtables. You're welcome to come back. And now we are ready to go for more Q&A. We have time. Any of you who wants to ask more questions or discuss more issues, I'm happy to do that. While you're getting ready, Irina is your contact. After this session, if you have questions and if you want to talk to somebody, I will not be available to talk to you one-on-one, but Irina will be, and she knows the program inside out. All right. Anybody? Questions, comments, issues you want to discuss? If any of you want to introduce yourselves, if you haven't spoken today, and if you'd like to introduce yourselves, feel free. This is also a networking time.
Yeah. So if nobody has anything, I'll ask a question.
Go ahead, Ranga.
Yeah. So what would be, what would you see as more typical kind of deal in terms of the amount raised and valuation, etc., and maybe tailored a little bit kind of to the stage and maybe stage I will be in maybe in a few months that might be of interest to investors?
Well, investors try to get, any funds. Like, I'm not talking about angel investors. You can raise an angel round with a small amount of money if you need that money. But if you're trying to raise a venture round, there are small VCs who would work with you, but they would want to get a certain amount of ownership. Like, they would try to get at least, 10-15% ownership, and maybe over time get a bit more. So investors try to take, funds. Just think about, put yourself in the shoes of funds. And by the way, if you go through the financing section of our curriculum, you will see numerous interviews with VCs and talking about how they're thinking about it.
Yeah.
So, the point is that they can only invest in so many deals, right? A small fund can only invest in so many deals. So it is kind of to manage that fund for success, they have to get a certain percentage of ownership in the companies that they invest in. Otherwise, it's not worth their time. They don't spray and pray. They don't invest in 200 companies, little bits. They want to, the ones that they invest in, they take significant ownership in and
I see.
Participate that way. Now, if you go the crowdfunding route, or kind of not crowdfunding, so to speak, but if you go the customer financing route and you mostly, bring in customers, you still need a lead VC to set the price of the round and so forth. You cannot name the price of the round. You need a lead investor who sets the price of the round.
Right. So
Make sense?
yeah, and so one quick follow-up. So instead of breaking it across 3 VCs, would one VC invest in 900? That would be sort of a little bit more of possibility?
But don't get hung up on 900 or 15 million. You're going to have, whatever stage you go out to raise money at, a lead VC will need to put a price on that and give you a term sheet. And then you can explain to that VC that this is what your intent is. As you're pitching, you can say, I'm working with these people, these brokers and these, commercial real estate industry influencers, and I would like to invite them to invest. And if you, so the term sheet then would take that into account, and then you can share that term sheet in a presentation to the community of investors. You don't really need angel lists in the middle of this, but you do need a lead term sheet. What you need is a lead term sheet. By the way, angel list is notorious for this. Angel list does not find you lead investors. You go find a lead investor, and angel list find you followers. Finding followers is not that hard. Finding leads is hard.
Got it. Just one quick last thing. So I am part of the IIT Startups batch that is happening now. There's a demo day coming up July 27th, I believe. And, I've been part of some other things in the past, but, that's kind of where we are somewhere.
Okay. That's fine. Just in that demo day, it's unlikely, given the stage that you just showed me, you'll be able to raise money at a 15 million valuation. Just be aware of that.
Mm-hmm.
It's too early.
Great. Thank you.
You're welcome. Anybody else?
Hi, Pradeep here.
Yes.
I have a quick question. Yeah, I have a quick question. So we have some traction. And so do we need to...
You do have traction. If you're talking about 1.5 million in revenue, you definitely have traction. You need to package your pitch better. Your pitch is not packaged.
Right. Fine. So
your strategy needs work, your pitch needs packaging.
Right. Fine. So in this case, do we need to go through the complete learning process, since you say or we don't have really time to go with that. So you guys can do you have
If
any
you do
other
not have
points?
time to do the learning, I don't want you to join the program because I don't have time to sit and teach you. You're going to have to do the self-learning. I will help you with the strategy work. I will help you with refining your pitch. But the homework you're going to have to do yourself. And if you're not willing to put in that work, I don't think this program is going to work for you.
Yeah. Okay. Anyway, definitely we need to learn all the way. But what I'm trying to say is, we are not a really very baby company. We have some traction. We have some business. So with this traction, do you think can you able to help us to do
Of
some?
course.
Yeah.
Of
So
course,
do you
but
have
I
any
cannot.
other?
I cannot do your learning for you. You're going to have to learn. Don't think that just because you have some traction means that you'll know everything. You don't.
Okay, right. So I don't want to hear that.
There's a very good thing that you have traction. You have validated pieces of your business. But then there's a whole other range of stuff that you don't know that you're going to have to learn. And that's it. Please, what I'm saying is, please, if you decide to join this program, please come with the mindset that you're going to have to do the learning and the studying. I don't have time to learn. No entrepreneur can take that approach. Because a lot of entrepreneurship in general is about learning, and then in a fast growth, fast-changing industry like ours.
Sorry to interrupt you. We don't say we don't learn. Okay, everyone must learn. Then only they can progress in any of the activity they are going to pursue. That's a different thing. Okay, yes. But what I mean to say is a completely generic program. So is there any tailor-made program based on our business? You know our business. You know the traction what we have. So from there you can develop some any tailor-made program for us to get into the program immediately.
There is a program that is tailor-made for early stage startups, and you are an early stage startup. I don't think I need to do anything to make anything for you to find value in this program. I know what I'm doing.
Mm-hmm. Okay, got it. Thank you.
You're welcome. I mean, my observation based on what you presented is you don't really know how to raise money. You will need to learn how to raise money, and we can teach you how to raise money. We know how to do that. We've done that a million times, and that program that doesn't need further tailor making for you. It is there. That information is there. You need to go learn it.
Got it. Yeah.
So, and then there is strategy work where you're going to need to, I mean, you're making certain strategy assumptions, which I pointed out to you today, that are wrong assumptions. One of the strategy assumptions is you want to come into America. I'm questioning that strategy decision. I think that those are the kinds of discussions we would be having. Is it convince me why this is the right time to come into America? Convince me why you want to raise money in the public market. I think these are flawed decisions, in my opinion, in my judgment. So you're going to need to, that's where we're going to have to dialogue and figure out, what is the right strategy, and accordingly, where there is learning. This is where the tailor-made learning may kick in, is that if there's something specifically that we need to, like I want you to go study a particular case study or a particular body of case studies. Like we have a lot of two-sided marketplace case studies. If that's something that I think that you need to go learn, I will point you to those. But that's in the dialogue that you're going to be having on your core strategy.
Okay.
That's how the program works. It's a combination of curriculum and roundtable, online curriculum and roundtable discussions. That's how the program works. Okay? All right?
Yep.
I don't see any other hand up. So I will adjourn for now. Olabode, I think your next step very much is focused really intensely on studying the curriculum, because I think you have a lot of gaps in your learning right now that rapidly needs to be filled up. So I would suggest that you go to the curriculum straight away.
Yeah, that's what I'm checking.
All right.
Checking.
You're very welcome.
Thank you.
Okay, I will talk to you maybe next week. And those of you who are planning to pitch next week, you've today had a bit of a dry run experience of what it looks like, what it feels like to go through one of these pitches. And you're most welcome to come pitch at a follow-on session. And the ones who have pitched today, if you decide to come into the program, then you can come talk to me at any of the Wednesday roundtables. All right. So long.
Okay.
Bye-bye, everybody. Make lots of
Okay.
progress.
Thank you. Thank you very much.
Bye.
Thank you. Thank you, Mitra.